what is crypto mining? Crypto mining is the process of generating the new structures necessary for cryptocurrency to function. Before moving on, I want everyone to have an understanding of what a blockchain is, because that's the foundation of where the crypto is stored, right? So just on a side note, a fun story. During undergrad, I had an advanced cryptology course, and I wasn't a fan of the hardcore math, but now I really appreciate the concept of cryptology and the math behind it. Blockchains may seem complicated, and I'm not gonna get into the in-depth math or logic behind it, so don't worry. But for those of you that are interested, feel free to reach out to me, and I can send you like great resources to go over the math if you are interested. But for this episode, to put it in simple terms, it's a type of database. So blockchains are a type of database. So for those of you that might not know what a database is, don't worry. I'll explain that to you right now too. A database at a very high level term is a collection of information stored on a computer system. This data is usually structured, hence the concepts of tables come into play. There are unstructured databases out there, but I'll save that for another time. Now that we know the basic definition of a database, a blockchain essentially collects information together in groups, also known as blocks, that holds a set of information. When these blocks are filled, they chain onto the previously filled block, forming a chain of data known as the blockchain. Now, all new information that follows that freshly added block is compiled into a newly formed block that will then be able to add on to the chain once filled. So now, how does the transaction process work? So say you're on your exchange, right? And you have a new transaction entered, right? You want to get this much cryptocurrency, say for example Bitcoin, right? So this transaction is then transmitted behind the scenes to a network of peer-to-peer computers scattered around the world. Now, this network of computers then solves equations to confirm the validity of the transaction. Now, this is where the mining comes into play, because not every equation is right. And the computers that can solve the equations fast enough and quick enough and obviously get the right equation get the spot in the blockchain. So once the correct equation is found by the computer, right? Once the mining is done, and the transactions confirmed to be legitimate, right? They're clustered together into blocks. Now these blocks are then chained together, creating a long history of transactions that are permanent. And that's what the blockchain is pretty much filled of. So whenever you hear blockchains, it's just a bunch of transactions that are stacked upon each other, basically, in this database called the blockchain. And now your transaction's pretty much complete. Now, to better understand why it's called crypto mining, I have a little analogy / comparison to make. So now you look at gold mining, for example, right? The miners put in the required work and are rewarded with an uncirculated asset. In gold mining, naturally occurring gold that was outside the economy is dug up and becomes part of the gold circulating within the economy, right? When crypto mining is performed, when these computers look for when these computers solve the equations to confirm the validity of the transaction, this cryptocurrency is created and then added to the blockchain. And you can think of it as mining, since the mined gold in my gold mining example and the newly created cryptocurrency in this example will now be used for profit in both cases, and a new currency will circulate, right? So crypto miners, so by now you know that what crypto miners do, right? So crypto miners add transactions to the blockchain. The work performed by these miners consists of a few main actions, just to summarize them. So verify and validating new transaction, collecting those transactions, and ordering them into a new block. A few other things, a few other actions of these miners can also includes adding the block to the ledger's chain of blocks, so the blockchain, and broadcasting the new block to the cryptocurrency node network. Again, not gonna go more detailed than that, but that's basically the basic concept of crypto mining.
That's great, Syed. So just to add on to that, we'll get into our discussion of the altcoins after this segment. But with respect to mining, basically, when you look at these cryptos, the gold analogy is perfect because the price of the crypto is also dependent on the same laws of supply and demand that we're accustomed to. Some cryptocurrencies are easier to mine, like Dogecoin, for example, is available in abundance versus Bitcoin, which is restricted in supply. So you look at the laws of supply and demand, and they do apply in this situation. The cryptos that are easier to mine have lower value, right? So given the fact that something like Doge does have an unlimited supply of crypto at this point, that's why there's such downward pressure on the price. But then simple economic policy can be applied to this. Like if you put a cap on how much Doge, let's say, can be mined in a certain year or over a period of time, they'll put upward pressure on the price of Doge. So I don't think crypto mining is similar to gold mining, like you used in that analogy, and the laws of economics that we learn also apply into the pricing, and it'll obviously have an impact on potential future growth. So we will discuss this in our next segment in more detail, but I just had that initial thought as I was listening to you. And for those interested in gaining exposure to crypto miners, there are two stocks that I have to mention to you. The first is RIOT, so that's ticker RIOT on the Nasdaq. If you look at the chart, obviously crypto's been down along with the rest of the market lately, but the 52-week high was almost $80. Now we're looking at a price of around $40, so that's a 50% correction. Mara, on the other hand, reached a 52-week high of about 50, currently sitting at around 29 bucks. So again, if you want crypto mining exposure, then I think these two companies are ones to take a look at. Obviously, have your own risk tolerance in mind, given the fact that we are in a very shaky environment in the markets. But if you do want exposure to a miner, then I think these two are the top ones that you can consider.
Yeah, and to add on to that, if you want to have exposure, of course, you can invest in those stocks. And also, you can mine crypto yourself, too. And I won't get into details on that here on this episode, but feel free to reach out to me, and I can show you a bunch of great resources and how to get started on mining. Mining cryptocurrency isn't really that hard as long as you have a computer that works with like sufficient RAM. It should be a good start. So for those of you interested, definitely reach out to me, and I can help you get started on that if you want to